He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
All right, we're on the air. Another edition of Angry Mortgages on the air. Special edition. It's really Mortgage Insiders. That's what we call this stuff. Mortgage Insiders. Hali Noble, who I've known a long time. Hallie has been of Fisgard, Fisgard. See, I got it. Okay.
Did.
Fisgard is a very famous in our business, well-known, highly utilized Mortgage Investment Corp. We'll talk more about that in a minute. But somebody who has been in the industry, how long, Hallie?
Licensed since 89, so 34 years. Licensed.
See, Hallie's been doing it longer than I have. She started when she was 15 in the business. I think it's about not far off, right? I mean,
I had to be 19 to be licensed, but
you were working for your dad.
Yes, absolutely. In the office, emptying ashtrays and beer bottles for a long, long time before that.
Jesus, as a 66-year-old, I so love the reference to ashtrays in an office. There's still some beer bottles today, but that takes me back. Okay,
oh.
I don't stray away from the fact I'm fucking old. Okay,
those were good old days, Ron. Those were good days.
They were big too. Those goddamn ashtrays were big, right? They were
yes.
right. Yeah, on every desk, and people would smoke, and hey, people, you don't know what you're missing.
Not fun cleaning them, though. I don't miss cleaning them.
Hallie, tell us a little bit about the work you do at your company.
Well, it's not just me. We have 32 employees. I run the business now after my dad has passed away this recently in April, with my brother Rafer, who's our CEO, and Dawn Panise, who's been with the company and our various companies for 30 years.
Jeez.
Yeah, so she is now our president, with amongst other people. It was generally Dawn, myself, and certainly Rafer, who does the heavy lifting. And
you are, we had Nick Cipriano on the show. Nick was on the show last week before. You always got to forgive me because I can't always remember when the shows are taped and when they play. And that's always a problem in the podcast business. Yeah. It's okay for Joe Rogan because he just goes every day, so he doesn't care. But for me, it's a little harder to remember. But Nick Cipriano of River Rock was on, and he talked about private lending. And your operation is quite different in that you guys cover a lot of territory, and Nick's just Ontario. So tell us about that.
Well, we started, obviously, in Victoria, where our head office is, where born and raised, where our family is, and today our only office is. Everywhere else is remote. Lending in British Columbia. And eventually, as the fund grew, we wanted to diversify, wanted to go into other markets, went into Alberta. And then 10 years ago decided, we need to diversify some more. And that's just, it's a good idea for us. It lowers the risk for investors, and we spread right through to Ontario. So BC, Alberta, Saskatchewan, Manitoba, Ontario, that's where we lend.
So,
and it really was based on risk, diversifying risk.
So yeah, for everybody, we talk about private mortgages in the show a lot because for every mortgage broker, that's a big part of what they do. I mean, some don't do any, we got to admit, some don't do any, but I would say 80% of mortgage brokers, 85% of mortgage brokers do some private mortgages from time to time through individuals. And there's a lot of famous mix, and Hallie's is one, Fisgard is one. And it's been around. And what Hallie's touching on is that there's a couple ways you can run your operation. You can be super focused like Nick is on just ultra specific locations and geography and type. And you could also do what Hallie's operation has done, is go across Canada. So how does it break down? I think you told me how it broke down.
Generally, 40% in BC, 40% in Ontario, 20% in the prairie provinces. That's based on, recent past couple of years, economic conditions, many other things, but generally that's where it is.
So this is what a lot of people don't realize, consumers, and unfortunately a lot of mortgage brokers don't realize, is that, it's complicated. Like, this stuff is actually complicated, and here's where it's complicated. In Hallie's situation, your organization needs to have an understanding of how the housing market works in Lethbridge.
Yes.
And Red Deer and Saskatoon.
Yep.
And Karamias. Maybe you don't lend in Karamias.
Don't lend in Karamias.
Don't lend in Karamias. Okay. But if you do hold your company, you talk to people in all those provinces. You deal with mortgage brokers in all those provinces. Yep. Okay. You're licensed in all those provinces, right? And that's complicated.
You can think of it. We have generally two regulators, a securities regulator, and then our mortgage brokerage regulator in each province. Saskatchewan a little bit different, but we're dealing with BCSC and BCFSA in Ontario and BC, and then the OSC, and then of course FSRA now in Ontario, and and many in other provinces. So it's very complicated for licensing, for education, for compliance. It changes, but it's still better for our investors. What we focus on is we lend on specific products. That average single family home, whether it's in somewhere in the GTA or whether it's in Vancouver. Now, it might be some condos and townhouses in there too, but it's the average. It's not the high-end jumbo loans, $2-3 million homes or even more. It's not the low end. It's not the 400 square foot condos. We have a very specific type of property that we look at. Don't lend in rural, don't lend in farms. It's specific. So it doesn't matter which city we're in. We know the product. Now we just have to work within the values and the guidelines in those specific areas. And of course, there's many different ways to get information now that you couldn't get before, whether it's TerraNet in Ontario. RPS provides a lot of information. Information is more prevalent than it ever was. So we can gather that intel.
Okay, so maybe it's become easier to work. It's complicated, but there's more information.
Yes.
You don't have to just depend on word of mouth about whether Red Deer's got good situation or not, right? So, by the way, when I say these names of these places, I'm not mad at anybody. Like, nobody write me about, oh yeah, I don't think you respected Red Deer properly. I mean, I got lots of respect for Red Deer. I've been to Red Deer. I've been to, like, Hallie's been to all these places.
I went to college in Olds, Alberta.
Olds, like, I know where Olds is. Right? I've been to Olds too, okay? I mean, no, only Hallie and me and everybody, all of Ontario has been to Olds in Alberta, okay? Right. Nobody else has been. Nobody else goes there. We love you, Olds, but not many people go there. So, wow, college in Olds, wow.
Yeah.
That's amazing. Yes. And by the way, let's take a quick note on that. It's actually wonderful, I think, because I've been to all these places. Like, I've been to everywhere. I've been to where you live. You live in Sydney, right?
Yep, just outside of Sydney, BC. Outside of Toronto.
I lived in Parksville for a year and a half. I've lived in all these places. I've traveled the country in Canada, and I think that's good because I think you would agree with me, Hallie. If you'd spend a lot of time traveling around Canada, you come to really like Canada.
It's pretty awesome. And it's one of the things that this industry has afforded me is I've been everywhere. I've checked out the smaller communities, the larger communities, looking for places, good places to lend. Not so good places to lend. But, you have to go and see it. You have to be there. You have to check it out. You got to drive through and go, St. Albert isn't as nice as it is in the pictures. Sorry, everyone. I'm not saying it's a terrible place.
We still love you, St. Albert.
It's just a little different, but until you've actually been there, how would you know?
You wouldn't know.
You wouldn't know. I travel a lot.
Yeah, you do travel a lot.
I do.
Okay, so you were telling me that that when your father decided to expand into Alberta, you just got in a car.
Well, basically, he gave me a bunch of map books, and I drove my little Hyundai Sonata from Victoria. And it's kind of funny because it was 2001. I still remember this. My very first meeting was at a Phil's, and I think it was on 11th Avenue with Gary Siegel, who now works for
I know Gary.
And we had breakfast, and he was with Invis at the time. And it was my very first meeting. I was very nervous. He says, "Where are you going to go?" So I don't know, I got a map book. At the time, now you can just Google mortgage brokers near me and I could go to offices.
Yep.
But to map this out and strategically go to these offices, and I drove from, Calgary through to Red Deer, through to Edmonton along the highway number 2, just to find out who's who in the zoo in Alberta and what's going on. And I was very fortunate. I met some great brokers early on who were incredible to me. Lauren Keepos, for example, been around forever. Yep. Lauren, he introduced me to lawyers, appraisers, realtors, and I really worked those networks to find out who I can trust and who could help us gather information. And that's just how, that was really kind of hitting the road in 2001. It seems like a long time ago now. And just driving around. Now things are different. It's a little easier to find out where everybody is.
Now there are probably a few 27-year-olds who got to explain what a map book is. Okay, like, it's got a, and this is going to get really weird, but it's got like a wire binder, right? Like, because you had it's wire instead of like bound, like a regular book or like a paperback. I won't explain paperback. That's going too much. But like it had a because you had to lay it down. To lay it down so it would lay flat, this map book, so you could see both pages and figure out which street you were going to. I know I've lost everybody under 30 right now because they're just thinking.
But you had those, and then you had your day timer.
Oh, yeah, you had a day timer, so you keep track of appointments, and a highlighter. And the day timer was like $800 equivalent because it was so important to your life. But anyway, we've lost everybody under the age of 30.
It was really fun, though. Those were good times.
They don't know what the fuck we're talking about. A wire? What are you talking about? Wire in a book? You know, nobody understands. But it was so different, and it was daunting, I guess, right? Because
that was a true cold calling.
It was really
you walk in, and it's like, all right,
hey,
let's do this.
You're a mortgage broker, I think.
Yeah.
Let's go. Anyway, and you did that, and you came across Canada. I think you came... You grew that business. I mean, and by the way, folks, I mean, like, it's a real thing. Lending is what Hallie does is not mortgage brokerage. Okay, this is your investors' money is on the line. Okay, and if you're serious, and how old's the company again? 30.
1994. So we're coming on our 30th anniversary. The Fiskar Group of Companies started.
Jeez, 30 years. Okay, so you got to be serious. The last 30 years.
That's right.
Through bad times. Like
you're damn right. So there were some very bad times, but if you're doing the right things and you're always looking that way, you can get through them.
Like 1991 in Ontario was no fun, right? I mean, that was, but were you in Ontario then? No, not quite that. Nope. But what was give me an example of a bad time in BC. What was and Alberta too, there was some bad times, right?
Well, of course, before the companies were born, but my dad was in real estate and mortgage investment in 1991. Yep. Sorry, 81, 81, 82, 83. BC and Alberta, not a good time.
Wow.
Our interest rates going to 20, 21, 22. We very quickly moved to Grandma's house, which I honestly didn't mind. I mean, who doesn't want to live with their grandparents? It was pretty awesome. That was a very bad time. 96, 97. There was blips in the road for very different reasons and right across the provinces, but it changes your products. It changes your pricing. You need to be nimble and adjust and be smart and not greedy. And I think that I was very proud of my dad and the family for always looking after the investors first.
Yeah, that's a really important thing that is not well understood by the public and probably not even that well understood by mortgage brokers. That when you're in the private lending business, as you are, your primary allegiance is to the people who've trusted you with their money.
It's their money. It's not my money. We're family heavily invested as well, but it's their money, hard-earned money. And in many cases, because we do RESPs and other, now we'll have the first time home buyers program. It's just registered plan.
Wow.
Sometimes it's their grandchildren. Now, that's a big deal.
So how many investors do you have?
Just under 3,300 right now.
3,300?
Yep.
Holy gypsy. I know for people who aren't, in the business, that's a spectacular number to try to look after, right?
Because we got great administration. They've been with us. We're very fortunate to have employees that have been around a long time and great processes. Takes some time to get that.
Walk us through a little bit. Like so you and now some other people. Tell us who works for you and calls on mortgage brokers across Canada.
Riza Ali.
He's
kind of our national broker relations manager. He's phenomenal.
I know Riza. Everybody knows Riza.
He's been with us. It's hard to believe he's been with us 5 years, but it seems like a lifetime.
Yep.
He seems like just inbred. Part of the Fiskard family.
Mr. Fiskard, yeah.
Absolutely. So he's been handling Ontario and Manitoba for the past 5 years. He's now national. We have Jen, and of course, a new person who's our product specialist is Sean in the office. And we're looking for someone in Western Canada. But it's been really myself and Riza hitting the road for a long time now.
Yeah, I think, you might have... Did Air Canada ever call you and say you have the most points of anybody alive? Okay.
I don't think they want to call me right now because I keep losing my luggage and screwing up my flights, so they don't really want to talk to me right now.
Sons of bitches.
But I did make it here the other day with both of my bags on a direct flight, so I was pretty happy about that. But no, yes, I've covered a lot of miles with Air Canada and WestJet for sure.
We'll get to your work in the mortgage industry in a minute, but it is incredible the amount of territory you cover in the course of I've seen years when I think I've seen you at every meeting that existed in the mortgage business, and some of them offshore too, like in Mexico and the Caribbean, and you're always there.
Well, that's just part of what we do, though. I mean, we honor our broker clients. We want to be there and support them. And it's really tough because there's so many private alternative lenders now. There's so many, and brokers are fickle. I hate to say that, there's some allegiance, but really it's fickle. It's who's last in the door. And our product is very basic. So for us, it's more of, educating and being part of their communities as well. And that takes miles and time.
Yeah.
And it's not easy, but if you don't show up, people wonder what's going on with your company. They wonder why you're not there supporting them. But they are also been really good to us. Yeah. So it's two sides. Sure, you put on a lot of miles, Ron, but without them, business either, right?
You and I both know there's some people never bothered.
It's true, but there's a lot that really do. And you talked about interprovincial before. One thing is really important, lending in multiple provinces, and you would know this yourself. Many really great brokers and broker networks, they do business not just in Ontario.
Oh, no,
they do business in multiple provinces.
No,
so they can say, I can call Fiskard because I do business with them in Ontario, but I'm also doing a deal in Alberta, and they know us.
No, we do.
Really
we're
important.
licensed in 3 provinces,
right.
And no offense to Manitoba and Saskatchewan, but we've never really felt an enormous economic requirement to work in those provinces. But you're all great people. We love you all.
Yeah.
I actually know almost every major city in those provinces, so I'm not being ignorant. I know about Brandon. I know about Medicine Hat. I know about I've been to almost all those places.
Yeah. You ever been to Broadview? That's where my family's from.
Not been to Broadview, no.
Hour and a half straight east of Regina. You should go there. You've gone through it if you've driven the number one.
My family's from a town, actually from Broderick, Saskatchewan, which doesn't exist anymore. My mother's family, because they sunk it under a dam. I had that for both sides of my family. My dad's family was up in the Arrow Lakes country.
Yep.
Okay. They sunk his town that he was born in, Beaton, under a dam. Yeah. So that's like both of my parents' homes are gone because they got sunk under dams. So they're both gone. But yeah, I am one of these people from Western Canada. I was born and raised in Vancouver, North Van, and I keep being amazed that I'm the only person with a 7-numbered. Like I'm the only old person with a 7-number. SIN number, like your SIN number is a 7, okay? My SIN number is a 7. But in Ontario, you never see any 7s. They come out here for a couple of years and go back, okay? Like everybody from British Columbia, they generally love British Columbia.
It is pretty awesome.
It's pretty damn awesome. You're right. Particularly where you live is pretty damn awesome. I lived on the island, Vancouver Island, for about a year and a half in Parksville, so I'm very familiar with how awesome it is. And the weather's a little better.
I think I brought some rain with me today, though.
It's been kind of a rainy summer, actually. Yeah. But there is a lot of travel. Like if you're dedicated in Canada, there's actually, if you were in the United States, nobody would even give you that big a territory. They'd say this is too much to travel. I mean, all these places. So yeah, it's.
That was my job within the family, and yes, living on an island makes it even more difficult to try and connect with clients. Even if it's just in Vancouver, you're not going on the ferry or flying to Vancouver for lunch. I mean, I'm gonna make 3 days of it, right? You're gonna do that. It's expensive and it's timely, but that's part of the business. And as we broke down what each of my brothers and my father and I were good at, I was more of the sales type person as opposed to admin. Like, give me a spreadsheet and my head's gonna explode. But give me someone to talk to, and I'm pretty good that way.
So for all you folks in Ontario listening to this, if you live in Sydney.
Yep.
Your fastest route to get to Vancouver is a plane that I think takes off from the water. No.
Yeah, there's some float planes and there's some other planes. It takes about 18 minutes.
Yeah, but it's like you to this day you can't hear yourself think of these planes. I mean, it is a loud. This is not. You feel like you're with a bush pilot.
It's the vomit comet.
Yeah. Oh my God. Yeah, they
not
are.
Fun.
And when it is beautiful to land in Vancouver Harbor. Yeah. Like it's really beautiful. When you're in a float plane, land in Vancouver Harbor, it is beautiful.
If it's sunny and not windy.
If it's sunny and not windy, and good point.
The fog and wind, you feel like you're gonna die.
Not rain and fog and like cloud cover that's down around your head. It's like, but like when on a beautiful day, it is a beautiful experience. I've done it. I've landed in a float plane in front.
That's why it's expensive to live there. People fly in and they go, "This is amazing. I want to live here. I don't want to live in Hong Kong. I don't want to live in Munich. I don't want to live in London. I want to live in Vancouver."
Yeah, and
they'll pay for it.
And people are paying for it.
That's right.
And quite a few people from Hong Kong own those houses too. That's for sure.
They do.
So back to lending. Back to lending. So tell us a little bit about how you guys analyze a file. So a mortgage broker sends you a file, say these people want a first mortgage on their home. I think I have to go to you as a private lender for these reasons. So how do you look at it?
Of course, we're always looking at the property first. At the end of the day, they're with us for a reason. Generally, it has to do with income, especially these days with the stress test, with interest rates rising. They don't qualify. So we're looking at location. We're looking at the property. They get hit by a bus. What are we left with? We're left with the property. So we've got to be sold on the property and the location first. And then depending on the loan amount, it's kind of the higher the LTV, the higher the loan request is, the more we're looking at income. And not in your traditional GDS, TDS sense. It's more of their ability to pay. So, between 65 and 75%, we want to see some ability to pay. Generally, more people will pay especially if it's a homeowner. So it's their home, it's not a rental property or investment. They're going to make that mortgage payment before they're paying their visa, for example.
They'll find a way.
They will find a way to do it. So, above 65%, we're going to be looking at that. Below 65%, could be stated. We're happy with the equity because we lend on that average single family home, which seems to be, we all know there's not enough homes in Canada to live in for the average person.
No, there's not. You're right.
It's a healthy market to be in. You start getting above that, we know $3 million you foreclose, that property doesn't drop by $10,000 a month to sell it. It drops by hundreds of thousands of dollars. And that equity could be eaten up very, very quickly.
So that's how you protect, for the listeners and the watchers, that's how you protect your investor, is that, when your investors trust you with $100,000, $200,000, $300,000.
Even $1,000 doesn't matter. It's their money.
So what do you run? What do you run your operation at? What's the mortgages under administration like?
Right now, I think it's 616 mortgages yesterday.
Volume?
Last year, right now, investor capital, that's all out, is just about $280 million.
Big.
With a $60 million line.
Big.
We are not actively working on our line because of the cost of the line has gone up as well.
Up, yeah.
But it's good to have. But that's generally where we sit. And, every year we meet. How much do you want to grow? You don't have to be the biggest Mick in the country. You don't have to be everything to everyone. Do what you do really well. Stick to your knitting. Dad always say that. Stick to your knitting. And you don't, like I said, protect your investors. They'll stick with you.
Protect your investors. Now, the reason Hallie and I talk about this stuff about protecting investors is, because there have been particularly in Ontario, to a lesser extent in British Columbia, but particularly in Ontario, I guess Alberta a little bit too, but there have been so many new mortgage investment corps open in the last 5 years, an incredible growth in the number of these organizations. So again, for the average public, this is a company that gathers money from investors and says, we're going to put it into mortgages. It's a flow through. It's got some tax preferential treatment. And we're going to put some money out, and we expect, to get 8, 9, 10% back?
Yeah, depending on
the mix.
And the risk tolerance of the investors. We're anywhere from a couple of years ago was 5%. Now we're kind of 6.5%, 7%. But that's really, again, because of our risk tolerance. We're not the lender of last resort. Yep. We're taking those just outside the bank deals where people might be with us for 1 to 2 years. We mentioned earlier, 2 years is average now. 1 year's not necessarily a short-term mortgage anymore. It takes longer to get out.
Yeah, it's true. The changes in our banking system brought about by the regulators, when it's just, the truth is, our mortgages in Canada amongst the banks and probably the big credit unions the same, because even though they're provincially regulated, they sort of have to fit into what the feds are doing.
If they're getting funded by OSFI, they're going to have to do it.
Absolutely. So then at the end of the day, because a lot of the big credit unions run bank arms as well. So we're heading for a super select category for mortgages in Canada. Like, it's going to get worse in the fall. There's going to be some more tightening by the government and underwriting rules. And it's just going to get to the point where you've got to be a really incredible person to get a mortgage. I'm not saying nobody's going to get a mortgage, but what I'm saying is it's not easy today like it was. No. You remember how easy it was to get a bank mortgage back when
I first got my mortgage?
Yeah. It wasn't that hard, right? It wasn't so hard. I vividly remember when the only requirement for the self-employed was 2 years notice of assessments, like 1 page. There's 2 pages was your income verification. Right. Now it's like 100 pages. Okay.
And you think about it, some of your self-employed borrowers, some of our best borrowers, our business for self people, they understand the value of credit and they're willing to work their butts off to make a payment, not just a 9 to 5, Monday to Friday. I'm not picking on anyone in particular, but they will do whatever they have to do to make their payments.
And we're reaching a point with the continued banking regulation where if you're not this person who is just a high credit score on a salary, maybe in the public sector, and you it's just like perfectly documentable in every way, it's harder to get a mortgage. It's just that simple. So when you have to go to a private lender for whatever reason, it's harder to go back to a bank because the banks are making it harder and harder. Again, not the banks. By the way, folks, this is really important to understand. The banks don't make these rules. The banks have good, they always had good underwriting rules. Like it's got to be understood, our banking system in Canada consistently outperforms other banking systems around the world, okay, in terms of risk, low risk, solid underwriting. People used to say, "Oh yeah, I think we're going to go the way of the States in 2008." No, we're not. We're not. We don't have any underwriting like they did in the States. We don't have the bad things that happened in the States.
And OSFI doesn't care about the consumer. That's not their job. Their job is to protect the banking system.
And we have a very well protected banking system, which leads to companies like Hallie's providing an important, because people, sometimes you just got to get a mortgage, right? And it doesn't fit the bank. It's got to go to Hallie's company or one like it. Sometimes, Hallie, I've talked about this. We become a little concerned about mortgage brokers who are salespeople. They're not, they don't have a credit background, right? They're not, like you were telling me how when you first started, your dad had a chalkboard and then he had a whiteboard and then he had a tablet, but he was always running the numbers, right?
Yep.
Always running the numbers.
Fire drills all the time.
Explaining risk tolerance, modeling risk. And you were telling me about how that you actually had to look. You actually were asking to reserve more, and you couldn't. Tell us about that.
Because in accounting, and I won't get into too much detail on it because number one, it's not my department. Don handles it all, but we have to do accounting based on IFRS 9 modeling. So International Financial Reporting, IFRS 9 reporting schedule.
Close enough.
Yeah. It's all really important, but it's based on our past 10 years performance and where we lent, what our returns were, what our losses might have been, what our products were across all the various lending areas that we were. And it's a very complicated model that you do which decides how much you should be reserving based on this performance.
Because you're projecting risk forward.
That's right.
Yeah.
Which is so interesting because think about the last 10 years. Right? And then look at what's happened in the last year and how, we're sitting there going in our boardroom, I'm not so sure about this. I'm not sure that the market's not going to crash more. You talk about it all the time.
Yep.
It's actually been okay so far. I thought it was going to drop a heck of a lot more than it already has in most of the major centers that we lend in. Yep. So we're sitting in the boardroom going, I think we should reserve more. Well, our accountants are saying, no, you've reserved enough based on the modeling. Okay, that's fine. We'll do that. But if we reserve too much, we get taxed on it. It's not good for the investor.
You become a bank instead of a mortgage investment corp.
That's not the rules that we follow under, but it's a very complicated modeling that we do. And I think it's very good for the investor.
Of course.
It's good for us to know exactly where we are at any given time. But running a MIC it's not easy. It's not something that when we saw B20 came in, that's when all these smaller operators decided, a MIC or being a private lender, I honestly hate being referred to as a private lender. We are an alternative lender. We are highly regulated. We're not
highly regulated. Yeah.
Highly regulated. We're not the individual private investor, the true private lender. Because there's nothing private about what we do. It's all there on our website's done, right?
It's all there.
But it's complicated. But B20 made it big business because there were a lot of clients in Canada, borrowing clients that didn't fit the bank mold anymore. And they ended up in the alternative or the private space.
And we're going to continue to talk about that on future podcasts, that, there's a moment in time where it reflects on sort of Canada's obsession with government regulation. And how in the States you get real pushback against regulation. Like people are like, I'm. Don't get me wrong. I'm all for good governance. Like I talk about it constantly that governance is the key to all this lending stuff. But there's just moments in time when you have to stop and say, wait a second, is it right that the whole Canadian banking system, which let's face it, Canadians depend on. They goddamn depend on the banking system. It's vital, okay? It's not like they let a bunch of competitors in. They haven't. Like there's no, we don't have 12 U.S. banks doing anything here. Don't have any, all right? So it's a very, very monopolistic situation. And if we allow government to overregulate lending in Canada, we create a super select type of borrower, which is great for the bank stock because banks keep on banking. But for the consumer, is it so good for the consumer?
Right.
The average borrower gets pushed out. And hey, I wish Hallie and all the other private alternative mortgage investment corps in this country luck and do a good job. But is that really where we should be?
No, Ron, honestly, when that B20, the first set of regs came up through with B20, as mentioned earlier when we were chatting, I was on a plane back from a conference in Palm Springs, and everybody was freaking out because it's new guidelines. They came out. It was going to seriously affect a lot of our, at the time we were calling them monolines, the mortgage finance corporations now, a lot of the lenders, and I was the only one on the plane smiling. and for the right and wrong reasons. It was going to be very good for our business because the quality of borrower just skyrocketed.
FICO scores went through the roof.
Yeah, I mean, we weren't, looking at someone with a 550, poor income. No, these were bankable clients the week before.
But not anymore.
Yep. So the side of that for our investors, I thought that's great. Awesome. We've got this great quality borrower. We got tons of business, hence all the new entrants to the mortgage investment businesses in Ontario, especially. It's a little easier to get in. But the consumer, was that good for the consumer?
Nope, not good for the consumer.
Not. It wasn't. And so we adjusted our rates. It became, we were always trying to be very fair. Good for the book, not good for the country.
Not good for the borrower.
Because,
borrower. At the end of the day, people need banks. I mean, people need banks to lend them money.
We need banks to get them out of our mortgages.
Mortgage, whatever. Okay. But if the regulator has decided that it's their duty to make it only the elite of Canada can get a mortgage from a bank or a car loan from a bank, I think that ain't a good idea. My opinion, not the greatest.
Well, think about it. Our exit right now, generally, because we are that outside the bank alternative lender, is that client going back to a AAA bank. That's they're working their way back up. Yep. Now it's become with rising interest rates, probably new underwriting guidelines through OSFI. Yep. It's going to get even harder for them to get out. So what do we do?
So they spend more time.
It's more time with us. That's why that short-term lending, that 6 to 1 year, 6 months to 1 year, that used to be
2 year, 3 year.
Now it's 2 to 3 years. Yeah. It is what it is. I hate to say that.
But it's reality. It's reality because if you push too many people down the risk curve, people who aren't really that risky, there's going to be money show up to address that. I mean, because you run a great operation, you have low defaults, you have a good treatment of investors, you have great governance, you tell the truth to your investors all the time, and you have multi-generational investors, I think, right? You have people whose kids are now your investors, right?
Yeah. Yeah, absolutely. We focus on that. Yeah. But there's lots out there that are not like that.
Yeah. So just quickly get back to what I've been alluding to. It's people who have just suddenly been mortgage brokers who said, I think there's a ton of money I can make doing private lending. That I'm going to invent myself as a MIC. I'm going to become a mortgage investment corporation. And I'm going to gather some investors together because I'm good at talking people into giving me money and talking people into mortgages, talking people into giving me money. So I'm going to get this thing. I'm going to do a cursory amount of paperwork. Yep. I'm going to just make sure that I get my money in, get my investors going, and then I'm going to start lending. Now, just to quickly summarize this so it's not boring, you have to issue a prospectus. You have to issue...
Or an OM, offering
memorandum. And you've got to say how you're going to lend. I'm going to do this much first mortgages. I'm going to do this all residential. I'm going to do in these geographic areas. You got to tell the truth about how you're going to lend.
And do it.
But they ain't doing it. Like, I know they're not doing it. We catch them all the time. We look at a mortgage investment corp, small one that started as a mortgage broker, and they're doing all kinds of wacky shit that doesn't make sense. They shouldn't be doing all this construction stuff because you can actually find their OEMs online. Yeah. It's not hard. Okay, you can look it up. And we know we can look at it as mortgage brokers. We just look at it and say, well, how the hell are you doing all these construction loans when your offering memorandum says you're only going to do 10% construction loans? This doesn't make any goddamn sense.
And construction's hard. We're a very good construction lender, and even we don't want to do it right now.
It's goddamn dangerous.
It is.
That's what it is.
Like, right now, it certainly
is. Dangerous. Like we occasionally do construction lending at our company, and I have reached the point where I can only do it to people that I've known for years, that I know have businesses that make hundreds and hundreds of thousands of dollars in profit, because it's dangerous. It's dangerous. Like it's construction, and sometimes delays happen, and then sometimes you find the person who's building their own house wants to get a $70,000 chandelier.
Yeah,
I'm not talking about anybody in particular, I promise. And all of a sudden, you ran out of money, and they come back to you for more money, and that's an issue.
Certainly.
So yeah, construction lending is.
There's different ways to go about that, Ron, but at the very basics.
But there's
right
no
now,
easy way.
There's no easy way. And
No.
what owner builder? Because if you're a competent builder and you're running a real business, you're generally going to be at a bank.
Yep.
So it's going to be the offshoots, the owner builders, the small builders that maybe just have too many doors with a bank and they're coming to us. But how many owner builders are on time and on budget? That's an issue.
That's an issue.
And then right now, in a market where my crystal ball is smashed to bits, I don't know what the value of that property is going to be 12 months from now, if it's complete.
Particularly 12
months
months from today in September 2023. It's a mystery.
So
okay?
if you're looking at that projected finished value 12 months from now, I'm not confident enough to put anyone's money in that right now.
Because that was your promise to your investors,
right.
is that you would be very careful and only put their money out in very specific ways.
Right.
But we've got a bunch of these newish mortgage investment corps developed by people who were simply mortgage brokers, no banking background whatsoever. By the way, it sounds like I'm really beating the hell out of them. And there's a few good ones, and you good people know who you are. You really do. You know who you are. You started as mortgage brokers, but you've done this thing so carefully, so intelligently, and on such a careful scale, okay, that you never just got investors for the sake of investors. Right. You always had a place for the money to go. There's a few of you guys and gals have done a great job, but there's some people lending money out there, investors' money, that I don't understand what the hell they're doing. Yeah. Really, I don't. Okay.
I'm with you there.
And let's face it, for the last, until just recently, if you're talking about from 2009 until 2021, it was hard to fuck up, right? I mean, the market looked after you. The market looked after you. Okay.
It covered the losses.
Yes.
It covered any problems. No one's asking questions when they're getting a great return and they're getting paid all the time.
Yeah, because the value of the house went through the roof.
That's right. That appreciating market, low interest rates. I mean, as a great return. That's not the norm. And when you've been around as long as we have, and thankfully when you have that track record and you learn from either our own mistakes or from others, you don't make those mistakes again.
Yeah, you really, the guy, when I was like a punk kid, doing my first job in a retail store, and a guy said to me, I was telling him about, you should buy this for this reason. And he said, okay, well, you can say whatever you want, but I'm going to do what I want. And somehow the conversation rolled around with, the guy said to me, I got to tell you something. And you can remember it for the rest of your life. Oddly, I have. He said, you will only really learn critical things. And then he did something weird. He pulled his wallet out of his pocket. Yeah. For all you guys who only pay everything with your phone, a wallet is something that you actually kept paper money in, okay? For everybody under 30, what's a wallet? Jesus, what is that? For all you guys who only pay things on your phone and never carry cash, a wallet is something you stored money and credit cards in, okay? So that's what he did. He pulled it out, and he said, for important financial things, he said, for financial things, you will only ever learn a lesson when it costs you money out of this thing.
Yeah.
Then when you actually lose money, you will never forget that you lost money out of your wallet. All right, I'll quit talking about wallets because you guys are looking at your phone thinking, what the fuck's he talking about?
The Apple wallet.
Jesus. I've heard of a wallet. There's a wallet in my phone, but what's he talking about? So... yeah, I got to do that a lot now. I have to always explain things using references that nobody understands, or only people my age understand, and I'm pretty goddamn old.
I get it.
So you only really learn from either borderline financial disaster or watching somebody else get in big trouble. And hey, and also another thing we have to address is, some people are also doing this stuff for the totally wrong reasons.
Yeah.
I mean, you have sort of a guy who lives in the same city as you, and I'm going to use his name. I don't care. YouTube can get mad if I want, but it's public, so YouTube can get mad if they want, but I'm going to use his name. Greg Martel. Like, there's a guy named Greg Martel who it appears he's run off with millions and millions and millions of dollars worth of people's money, okay? Now, by the way, he was in the mortgage business. I've met Greg. You know, the first time I met Greg, I talked to him for a little while. We were at a conference, and I thought, good-looking guy, smooth talking. I think he's a total bullshitter, actually. I really do think this guy is a bullshitter, okay? And it turns out he was. And in the end, as he flailed away through the mortgage business, in the end, he was selling note loans, right? He was selling promissory notes.
No security.
No security, okay? And he was running a Ponzi scheme. by all accounts, because there's no...
It looks and smells like one.
Yeah, well, the bank account's got $1.28 in it, so the corporate bank account's got $1.28.
I'm not a judge, but it's certainly not good.
Well, some judges have acted on it, they're looking for him. I think there's warrants out for him, okay? They're looking. They're trying to find him, maybe in Thailand somewhere. Anyway, so this is what we tell people in investing. Sure, you can still lose your money in the stock market. You want to put money into shares, you can lose money. But at least there's a basic framework of, systems around it. Like, if you're investing in stocks through TD Ameritrade or whatever it is,
there's regulation. There's all sorts of
things,
compliance, all sorts of stuff.
You can still lose all your money,
absolutely.
But there's at least not pure scoundrel activity going on. Okay, but folks, if somebody comes to ask you to invest in private mortgages, or they're going to invest in note loans, or they're going to invest in bridge loans, or whatever the hell they tell you they're going to invest in, you gotta watch the shit out of that. Okay.
Well, check with the regulator. At least see if they're licensed appropriately. See if there's anything filed against them before. Even just anything. And the unfortunate part that I see so far. Again, I'm not a judge. I'm not the auditor. I'm not a forensic cop. Nothing like that. But man, when you got nothing but a note and you're giving someone, whether it's $1,000 or hundreds of thousands of dollars, where's the security? Where is it? And have you done business before just because you said you're a mortgage broker? Make the calls. As I mentioned earlier, every page of ROM says you could lose every penny.
Yep.
That would mean every one of the properties of the 616 properties that we have on the books would be worth zero.
Which is really, really hard.
But we have to say that. But there's someone that's raising, what did they say, $226 million? It's amazing. I don't know how they come up with the number.
Unbelievable number,
I don't care if it was $1 million. It's someone else's money. With a piece of paper?
For sure. People have lost millions.
Absolutely.
For sure.
And it's not good for anyone associated with the mortgage industry at all, because he called them bridge loans, which was between two
sounds
properties.
like it's real estate. Yeah, that's right. Sounds like it's a
really
it's a
sad and certainly a stain on any type of mortgage.
But folks, listeners, viewers, people out there, and also when you're studying these people offering investments, go ask to talk to others and find out what their reputation is in the community, and find out, just don't listen to one person. Talk to a few. If you'd have talked to Greg Martel, and then if you'd have talked to one of Hallie's people, they would have told you, no, I don't think you should do that. You should be able to see the houses. Okay. Right. You should be able to see the actual evidence of the security that you're investing in, as opposed to a note loan with some names and addresses that nobody really knows anything about. Yeah. Okay,
that's devastating. What's happened there?
Terrible. Yeah. All right, another topic I really wanted to touch on is Hallie has been a enormous, and I'm not trying to embarrass her, but it's just true, has been an enormous supporter of the whole mortgage industry and community forever, right?
Yeah. It feeds our family.
Yeah, but you've gone way above and beyond. Tell us about your experience in working with the National Mortgage Brokers Association. How far does it go back? How did it start? Tell us the story.
It really started, my dad was huge in, not just being someone that took from an industry that we were involved in, but to give back and be a participant for many different reasons. And it really started back with him. He's president of our local real estate board, British Columbia Real Estate Association, real estate councils, and many different things. Most recently, the chancellor of Royal University, and a ton of other stuff if you ever read his bio. But what he always said is that, we only know what we know within the four walls of our office. So I would only know what my dad and my mom taught me.
Yep.
So be involved in the community. Be a fair and generous and kind person we talked about before, and maybe people will do that back to you and share their information. So when we just lent in BC, I became a director and then became the president a few times of it. What at the time was the British Columbia Mortgage Brokers Association. Now it's CMBA BC. From there, we were just lending in BC and Alberta, Alberta shortly thereafter. So I got to know people. I got to know other lenders. I got to know brokers. I got to learn what they knew, and they were very gracious sharing information. But as we moved across the country, I needed to now know what was happening out of the walls of our two provinces that we worked in. And so we became a director of, at the time, was CAMP, the Canadian Association of Accredited Mortgage Professionals. Ended up being the chair there shortly thereafter. It was quite a quick move. And that was in at 2010, 2011, I ended my term there. But it was great because I met a lot of really influential key people in the industry that I can call on at any time now for advice. for finding out who's who in the zoo over there that I may or may not need to know. And that's really what it was about, was participating and learning from those that knew way more than I knew. And that was a great advice from my dad. We only know what we know. Go find out.
Yeah, and look, let's face it, your dad also gave back to the community for just the reasons of giving back to the community. You know, just think we're part of a community, so we should give back. By the way, I never do that shit. Okay, like I don't do that.
Because you have people like me.
I'm just an angry son of a bitch who just chirps off a lot in the mortgage business, but I don't belong to anything. Well, we pay our dues to be members, but I don't serve on any. They won't have me anyway. I've said too many abusive things in my day, as you can probably imagine. Everybody listening was probably just nodding their heads right now. Yeah, you've told some fuckers off. I know you have. But I want to go back to what Hallie just said. Yeah. So the reality of life is Hallie's being very gracious, okay, and talking about the benefits she got out of it. But I'm going to tell everybody out there that when you volunteer, and it's all volunteer, okay, when you volunteer, you run for these boards, and when you get on the boards, and when you do the work, it's work. Like it is goddamn work. Like I've seen it. I've observed it over all these years. Okay. It's actual work. It's not just, we got a bunch of staff people over here and I got to show up twice a year. You got to go to meetings. You got to be part of conference calls. You got to do a ton of stuff. You got to physically attend all this shit. You got to go to this conference to show yourself that you are, I'm in this thing. Yeah. I'm the chairperson and I'm attending and I want to encourage everybody. You
put yourself out there.
You put yourself, and this is what I want everybody out there, every mortgage broker out there to know this, okay? Because a lot of people think, they do it to gain customers. It's just a selfish thing. For everybody who thinks that, you're fucking wrong, okay? You're just wrong.
Lot more times.
Hallie has given up more of her life to do this, to help the mortgage brokerage industry, than any amount of goddamn leads on mortgages she ever got, okay? Like it's 100-to-1 ratio, okay? Everybody who thinks people join these things for a business reason. Well, you and I know a couple of people who did it for business reasons, and
it's not bad for business.
It's not bad for me, but for this, we know sons of bitches who just did it for business.
That's true.
Did a shitty job while they were doing it. Like I don't want to talk about a chairman who was like so drunk most of the time he never made it to any of the fucking meetings. Okay, so we got that guy. You know who you are. You do. You really do. You know you were asleep. Okay, but Hallie was never that person. No. And it's a lot of work. And if you get involved in associations on a volunteer basis, it's tough. It's hard. Yeah. There's politics. There's bullshit. Yes. There's going through. Hallie, you went on and you did something more. You got involved. Tell us about WIMI.
Well, it's interesting because you go through all the work at associations in your business and you're involved. And now you're like, okay, well, what's next? Mm-hmm. By the way,
most people don't say what's next. Most people just go back to their house and don't do nothing. But
I was only 40 years old.
You kept on going.
I just got inducted into the Canadian Mortgage Hall of Fame. I was very proud of that. And I was like, I'm 40 years old. I got a lot in here. I got a lot of time. Well, I shouldn't say I didn't have a lot of time. I mean, there's no time. But what can I do? And there were two things that happened. While I was the chair of camp, I spoke at a conference in Melbourne, Australia, and was asked to speak at a women's event. Only women. And it was run by something called the Women in the Mortgage Business Network. It was on LinkedIn and was part of the MFAA, the Mortgage Finance Association of Australia. And they wanted me to come and speak at this conference of just women. I'm like, wow, conference of just women. I've never done that before. Remember, this is 2009. I think it was 2008, 2009. Interesting. I learned a lot about, I was a very male-dominated business in Australia. Not that different than here.
It was a really male-dominated business here, too.
But at the same time, remember, I didn't grow up in a corporate environment. I grew up in a family company where there was no glass ceilings. There was like, you just do what you're supposed to do and build the business. So it was very different. It was a learning curve for me. But so I went and did that and then came back, and a lady named Suzanne Fleur-de-Lis-Aujala, at the time she was an assistant to a mortgage broker in Vancouver, looking for a mentor. A mentor, to me, that seemed like really serious, like having kids, man. I didn't even have any kids. I was like, I got a business. I couldn't be a mentor. I really honestly didn't really know what that was, but it seemed daunting to me at the time. And that wasn't spoken about a lot. But she said, I really need some help. I want to learn from other women. I'm like, okay, great. Didn't happen. We sat on it. She came back to me a couple months later and said, let's start a Facebook group and maybe get 30, 40 women from across the country to start sharing information. What's happening in Winnipeg? What do you need to learn? Building confidence, leadership skills, throwing your hat in the ring, being part of boards, stuff that they wouldn't normally do. Well, that 30, 40 women quickly became 100, 1,000. And now in our 14th year, almost 15th year, we have 5,600 women just learning from each other. It's very different than some of the other sites that you'll see on Facebook. It's quite supportive. It's not just about mortgages. It could be about just having a bad day and needing a glass of wine, and it could be all sorts of different things.
Nothing wrong with that.
Nothing wrong with that. And that was really the start of it. Just women helping women. But that community of women in the mortgage industry that was right across this massive country that we have became very small and very close. And I thought it was pretty cool because they were really learning from each other. There's a lot more we can say about it, but that's generally how it started. And it just goes on and grows on its own.
But you also are a continuous influencer on it.
Of course.
You've done a ton
of course. But there's lots of other ladies too.
Sure.
There's
it's a group.
Some of the leaders that you see, the women leaders that you see in the industry now, were very early, I'd call them advisors on this group that have helped many women that have their confidence has grown, their careers have grown. You've had some of them on the show here, and are pretty amazing women in their own right. And again, I mentioned it's not a women versus men thing. It's like, hey, ladies, get your shit together. You don't get what you don't ask for, and you don't get what you don't work for. And we were able to really work together and to really break down some barriers and do good things in this industry. I'm very proud of it.
Well, listen, it's never a women versus men thing, but what it always is a fairness thing.
Yep.
Okay. So if you look at the financial services industry, it is still so dominated by men. It's ridiculous. There is no woman CEO of a big Canadian bank. Nope. There's one in a tiny, tiny bank, Laurentian Bank. A woman became the CEO. And once she joined that bank, found out that it was sinking. Like it was Laurentian Bank. They had to offer it for sale because it was going nowhere. And she says, hey, you've invited me aboard this ship. You've got to tell me that down in the bow of the ship, there's holes in it. We're sinking here, for Christ's sakes. So there's no woman has ever been the CEO. It'll happen someday, but
out of the bank, there's been some pretty good CEOs, though. Like Kathy Gregory's done a pretty darn good job.
She does on the lending
her
side,
business.
but she had to invent her own company to become the CEO.
Yeah,
okay,
she busted her ass to do it. So I'm very proud of her.
Nobody was letting her in. Okay,
that's why she had to do it herself.
The only way that a woman in those days, even today, I think, you could be a woman CEO. Marina is at RFA. She's doing a great job. But the reality is that Kathy had to. And this is the credit I give Kathy. We're not actually the best of friends, but
doesn't matter.
But the credit I give Kathy is she started something from nothing. She had to do it herself.
Yep. Nobody
was handing her a CEO job. Nobody's letting her run a company. So she had to open her own damn company. Okay.
And look what she did.
That's what happened. So
our president is a woman, Dawn Panisse, the one I mentioned earlier.
Yep.
30 years in, started as a receptionist. There's going to be more of those. Kristen Mitchell, she's a partner and now in Pineapple Brokerage. So there's ladies coming up.
High finance, like at the top of the banks.
I agree.
They don't let women in to this day.
Yep.
So when people say that there had to be women in the mortgage industry as a group, because guess what? Men weren't letting them in. Okay. And by the way, I am like Mrs. Mortgage Guy will tell you that I am the farthest thing from a feminist. Seriously, I am not a feminist. I just believe in fairness, okay? Yeah. And when you see things that are blatantly unfair, okay, and also sometimes, and men, this is true, not all men, thank Christ, not even like a tiny minority of men, but there are toxic fucking men out there, okay?
Yep.
Getting drunk at industry functions, doing ridiculous things, brutal things, stupid things, and always aimed at women. Always aimed at women. And thank God that's been calmed down a hell of a lot. Not like it's eliminated, unfortunately, but it's been calmed down a hell of a lot by people like Hallie and people like her in the industry who called it out and said, this is fucking stupid, okay? Yeah. Like, you guys this got to be stopped. So here's the thing. Some professions are now dominated by women in Canada. Like, I would say today, in another 5 years, the legal profession is probably going to be more female than men. And the same in medicine. I'm going to suggest to you that eventually, I believe today, there's more women doctors graduating, medical doctors graduating than there is men. Okay. So, but seriously, we've gone all this long way, and there's never been a CEO of a major bank in Canada that's been a woman. So that tells you something. It's an industry. It'll change, but it's changing damn
Gotta keep
slowly.
Working on it.
Change it damn slowly. We've had female premiers long before we've had any bank CEOs, so that's kind of fucked up.
I'd like to see even the stats on women brokers, women versus men as far as the numbers go. But when you go and get your broker or agent license or whatever it's going to call in various provinces, you don't tick the box and says you're female or male, because there'd be a lot of other boxes as well right now.
There should be a lot,
for what you are. But it'd be interesting statistics to say, where are we at?
Yeah, no, I think it's getting, I think in terms of new agents, I think it's probably 50-50 today. I think
feels like it.
Is. Feels like
it feels like it when you travel around and you go into
like
offices and you go to events. It certainly feels like it. There's certainly more representation on panels and speakers throughout these conferences.
So again, nobody in the audience think that Ron's gone soft. Okay, Ron is always the same son of a bitch he always is. Still same son of a bitch he always is. Still going to be abusive to tons of people the way he always is. But fairness is important. Okay, and for a lot of the time in the mortgage industry, there wasn't a lot of fairness.
Right.
And it's coming. It's not all the way yet, but it's coming, and it should be here. And I'll be straight up with everybody who ever asked me. I would say Hallie is one of the reasons that there's more fairness in the mortgage industry today.
Thank you.
Than there was when you started in the mortgage industry. A lot more.
I didn't even realize how unfair it was.
You found out.
I found out.
You found out just how goddamn unfair it was. Okay.
Yes, and I encourage all women, whatever level you are, how new you are to the business, you don't get what you don't ask for. You want a raise. You want to work your way up through the corporate ladder. You may not get it right away, but you've got to at least ask for it and know where you're going. Men have no problem with that. I want to be the president. I want to be the CEO. I think you just have to be bolder and go and get it.
Oh yeah, there's the end result of men always being willing to ask for something is so many shitty men doing the job. Okay, like I said, you're right. We're not afraid to ask. We're never afraid to ask. We'll keep on asking. We'll demand half the goddamn time. But not always the right people get. A lot of right people do, but not everybody does.
Just wait. There's some pretty incredible women coming up the ranks here.
100% there is. Yeah. But like never. This is important. Never, ever neglect the fact that some people are pioneers. Sure. Okay, and you're a pioneer in that whole thing. You're a pioneer in the alternative lending space, a pioneer in the mixed space, and another really important thing. Hallie's company, Fizgard, has never been in regulatory trouble.
No.
Okay, never. There's never going to be an audit where, I guarantee this, there'll never be an audit where the regulator says, "Oh, look at this." Oh, they say, look at this stupid shit all the time. They always say some stupid shit.
Could be a word wrong here.
Oh, look at this. You missed a comma here.
Right.
Okay, fuck you. Okay, that's crazy. Yeah. But there's never going to be, you're never going to read about Fizgard in the Greg Martel category. Okay?
No.
Never going to happen.
Absolutely not.
Never going to happen. By the way, there's far, far more great operations than there is evildoers. Like, thank God there's only a few evildoers. They give us all a bad name, though. That's reality. Yeah. Okay? But never going to happen. Honesty, good governance, that's what it's all about. And if you are in the mortgage business and you're looking for a private mortgage, all I can say is that Fizgard would be a great place to submit an application to, because that's reality. Okay.
Thanks, Ron.
Thank you, Hallie. Thanks for being here. We really appreciate it. Thanks again.
Got it.
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.